Got it.
Right, welcome everybody. Let's get into another training. And I think we have went over bottom formation a couple of weeks. So we need to move on. But let's make sure we understand it before we move on. So let's get into our quizzes and doing it. Get started in our normal fashion. So I'm turning it over to you, Barbara. You ready?
Yes, sir. So here is our disclaimer for Futures and Commodities one-on-one trading group. Trading and investing carries a high level of risk. You could lose some or all of your investment. Trading commodities or any other financial instrument may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. We accept no liability for any losses or damages you may incur. This means you alone are responsible for your actions in any trading or investing activities.
All right.
My appetite's my appetite's big,
All right. That's what we want to hear. That's what we want to hear.
but I'm on a diet, so I only risk 10% of my holdings.
Absolutely. All right, y'all. So let's get into the quizzes that we had over the past 2 weeks. Cause I think we had a break. Been 2 weeks since we've been on here, right?
Yes. So, quiz number one. In a bottom formation, the number 3 point represents what? A. Support and exit. B. Resistance and exit. C. Support and entry. D. Resistance and entry. E. Not sure. F. None of the above. In a bottom formation, the number 3 point represents what? A. Support and exit. B. Resistance and exit. C. Support and entry. D. Resistance and entry. E. Not sure. F. None of the above.
Talk to me.
Your risk and your exit if it's a bottom formation? I don't think that was one of the options, though.
Risk and exit, resistance and exit is.
So, so which one are you saying, Pam? Bottom formation got everybody little, little tense, little stiff, Barbara, for some reason. We went over this a couple times, so we should have everybody shouting on here. What? Nobody got anything for that quiz?
This this was a quiz that I think he was talking about in a bottom formation. Yeah, I put A, support and exit. Could be wrong, but
But hey, support action. Okay. All right. So what was the um what was the question one more time, Barbara? Can you give us the question one more time?
Sure. In a bottom formation, the number 3 point represents what? Support and exit. A. B. Resistance and exit. C. Support and entry. D. Resistance and entry. E. Not sure. F. None of the above.
It's
Pam
exit.
put A.
I
She
put
said
A.
she said A.
Is that what John said too?
That's what John said as well.
Anybody got anything different? Mm. All right, Bob.
I think I put A.
Yes, you did, Steve. You put A. So in the bottom formation, the support levels would be the number 1 and the number 3. And the number 3 is always your exit. A bunch of people got this answer correct. So
Mm-hmm.
a lot of people got it correct.
Good, good. Okay. What else did we have, Bob?
May Coco made a bottom formation. Has the formation been confirmed? And let me share screen so we can see. A, yes. B, no. C, maybe. So let me share my screen.
Mm.
So Coco made a bottom formation, but has it been confirmed?
No.
A, yes.
No.
B, no.
B,
No.
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 Why
No.
hasn't it been confirmed?
Why hasn't it been confirmed?
Talk to me,
Hasn't
Jamal. I
broken through
heard you.
the
I
number
heard you
two
jump
yet.
out there first.
Because you can't see the rest of the chart. First of all, you can't see the rest of the chart how it's how the formation has been made, whether it's been solid or not.
Well,
But
hey,
we can
because
see it
it,
hasn't broken through the number two.
wait.
No.
And it's hard to see that. That's why I say
You,
that.
can I tell you something, Jamal? You can't see the rest of the chart because it hadn't happened yet.
Very
Actually, it
good. Very good.
has. Actually, it has, but you got to remember, it's always, I say this all the time, it's always easy to trade this after the fact. But remember, today's the day that we're looking for it. I mean, we're looking for a confirmation, but tomorrow hadn't happened yet,
So then they
correct?
confirm. Right.
So, so how do we know it will be confirmed?
I heard Pam say something. What did you say, Pam?
Well, I was responding to Jamal when he was saying that couldn't see the rest of the chart. I said, but what we can see has not broken through the number two yet. So
There you go.
that's that'll be, once we can
Congratulations.
see that, it'll be confirmed a couple of times.
Right. To make sure everybody understand that we do have a 1, 2, 3 on the chart, but it hasn't been confirmed yet. And how is it confirmed, Barbara?
When this number 3 right here trades up, right here is the number 3. When it trades up and bypasses this number 2, that's when it has confirmed. And that's when you can enter the trade in a bottom formation and trade it up higher to the where the 50% is at. But it's right here at the tip, but it has to go further, go up past this point. That's what Pam was saying, actually.
Thank you. You said it so much clearer than I could.
Great, great. Did we have more over that 2 week span, Barbara?
Let me.
Yep.
Here's another one. After a bottom formation has been confirmed and the market trades in a uptrend, what role does the number 2 point play after the confirmation / breakout? A, number 2 point is new resistance. B, number 2 point is your target. C, number 2 point is new support. D, number 2 point is your stop loss. E, not sure. F, none of the above.
Everybody, please pay attention. Please pay attention. Barbara, read the quiz one more time.
After a bottom formation has been confirmed and the market trades in an uptrend, what role does the number 2 point play after the confirmation / breakout? A, number 2 point is new resistance. B, number 2 point is your target. C, number 2 point is new support. D, number 2 point is your stop loss. E, not sure. F, none of the above.
I'm gonna go. I say A. So,
Resistance?
What is A, John?
A is the new resistance. Number 2 point is new resistance.
Okay. Anybody else? Barbara, can you share screen and pull that chart back up again? The cocoa chart for the last quiz. Anybody else got anything on other than A? What is that A? What you said, John?
Yeah, that's what I said there. I'm not sure about it, but I say A.
There's a couple of people said support in the chat.
Okay. Well, now that we have this chart up, Barbara, can you read that quiz one more time and the multiple choices? So this chart was from the previous quiz, but it's for a bottom formation. So we're gonna look at this chart. Look at this chart while Barbara is reading the quiz.
Is Barbara talking on mute? I'm not sure. Barbara, you there?
I'm here.
No.
Okay, I had to pull it up on my phone because I got that on the screen. After
Oh,
a bottom formation has been confirmed and the market trades in an uptrend, what role does the number 2 play after the confirmation / breakout? A, number 2 point is new resistance. B, number 2 point is your target. C, number 2 point is new support. D, number 2 point is your stop loss. E, not sure. F, none of the above.
Okay, Barbara. So the quiz says after, but let's look at this from before first.
Okay.
The number 2 point plays what role before the confirmation breakout?
The number 2
What role
point
is
is
the number 2?
always your level of resistance in a bottom formation.
Okay, now that the market has traded to that number 2 and tested the number 2, traded through it and confirmed, what role now does the number 2 play?
That number 2 becomes new level of resistance because it's made a new number
a
2.
new number 2.
So in our quizzes, in our quiz and our multiple choices, what would be the answer?
A.
A.
I would still, yeah, A.
Is everybody understanding the quiz? I think it helps if you've seen that visual looking at the chart. On this quiz, we didn't have a chart. Well, I think it helps looking at the chart to make sure we see it. Everybody good? Everybody understand that?
Mm-hmm.
Yes.
Yes.
Yep.
All right. Did we have one last quiz, Barbara?
I think so, yes. Let's see. Yes. When the market makes a bottom formation, this indicates that an uptrend is possibly starting to reverse and trade in the opposite direction. A, true. B, false. C, not sure.
One more time, Barbara.
When the market makes a bottom formation, this indicates that a uptrend is possibly starting to reverse and trade in the opposite direction. A, true. B, false. C, not sure. Think about it.
I think that's a tricky question.
It
Me too, Mr.
is.
Johnny. I think
It's
that's why he got
tricky
a smile on his face.
They
That's why I told
they
him think about it.
because I
they
put
didn't
A,
they
and I
didn't
think it
they
should
didn't
be
make
A.
a Chevy in 1955 with a 4-barrel carburetor.
Come on, y'all.
Think.
I, I think it's false. I said A at first because I didn't read it thoroughly, but I think it's false.
Think it's false.
Yeah.
I think somebody in the chat. Who was that? Somebody that said something in the chat. Pam said false. Anybody else got an answer for me? Come on, y'all.
I'm
We
gonna go
don't
with false too. Yeah.
we don't hit this bottom formation 2 weeks in a row, so y'all got this. Come on. We just stay down. Does, any, does
Okay,
anybody have a different answer? Anybody think it's true?
and trust me, muddy you this shit.
I did.
Nobody?
I thought
You
it was
did,
true at
Pam?
first. Yeah, but
And
like I said, I didn't read the question correctly, I don't think.
All right, so one last time, Barbara. Can you pull that same cocoa chart back up again?
Yes, sir. I can.
initially, my first thought was false, but then I changed it to true.
Okay. At first you thought it was false. And then you said true.
Correct.
I thought it was
Okay.
true also.
The reason why I said it's true because if it's making a bottom, then it's initially that that last bottom point is going to reverse and go up. So
Exactly. So I want y'all to listen to the quiz. Very good point, Maya. Very good point. Listen to this quiz and let's look at this chart. I want y'all to look at the market before the formation. So that everybody see the downtrend that the market was in before we had a bottom formation.
Yes.
Yep.
All right. So the
Yeah,
market traded down and start to make a bottom. The market
Mhm.
means that means the market started bottoming out. It was in a downtrend. It started to make a bottom. The market didn't want to trade any lower. It started to bottom out, forming a bottom formation, which means that the market could possibly be changing direction, as Maya was pointing out. And now we could be changing directions to now go in the opposite direction. Now, Barbara, can you read that quiz one more time?
When the market makes a bottom formation, this indicates that an uptrend is possibly starting to reverse and trade in the opposite direction.
So the market's making a bottom formation. Is a uptrend reversing right now?
starting.
Was the market in a downtrend previous before the uptrend, before the bottom formation? We see the big downtrend, correct?
Yep.
Yes.
So now that the market traded down and made a bottom formation, did a did a downtrend start to reverse or a uptrend start to reverse?
The downtrend
That,
was going up, so it was going towards making an uptrend.
yeah, so there was no uptrend to reverse the downtrend occurred before the bottom formation, and now the market's changing direction.
Mm,
So the downtrend would have been what's reversing, not a uptrend. We was not in an uptrend before
okay.
the bottom formation. We were in a downtrend. Does everybody understand that?
Trick question.
Big time.
That's why I said, that's why I
Yeah,
told
he
y'all to
got me
think, because I
too.
knew it was a trick question.
Darn sure got me.
Mm-hmm.
Big.
Trick question. That was good though.
Yeah. This was to make sure y'all were paying attention.
Well, I wasn't that at first.
Yeah.
Big
So just
doggone trick
understand.
questions, boy. These daggone trick
Yeah.
questions.
Yeah. I had to make sure y'all was on your P's and Q's on that one. All right. So, Barbara, I think we need to jump on into this week training. Looks like we
Yes, sir.
as far as time concerned, well, we did have a lot to cover because there had been 2 weeks worth of quizzes. But
Yes.
what you got for us now?
Okay, are we going into top formation?
Yes.
Okay. All right. So here we
Get
go.
into top since we know the bottom. We need to make sure we got a top formation as well.
Okay. So we're now going to do top formation tonight. This is going to be lesson 10, and it can be found in the manual in lesson 7 for futures and commodities 1-on-1. And we have an excellent retreat coming up. We have let you guys know who our guest speaker is going to be, Miss Jasmine Strickland. She comes with a ton of experience and expertise, and we really want you guys to be there so you can unlock your wealth and opportunity. This starts with a meet and greet Thursday night, April the 30th, and it's all day sessions on Friday and all day sessions on Saturday. And we are going to expose you to something new that's never been taught on the call before. That you want to make sure you are in Gilbert, Arizona, April the 30th through May the 2nd. So make your way there. Tickets are $199. We do have a room block at the Hyatt Hotel, which is minutes away from the location. And visit the website, Futures and Commodities 1on1.com. Go to the events page, book your ticket, book your hotel so you can be there to help navigate your life and learn more. So we want you in that place. Next up, our
Oh,
calls, every call
and
that you,
Barbara, let me say something if you don't mind,
yes,
Barbara.
sir.
I feel like I need to mention this again because we did talk about this um a few weeks ago, but it's really not as not as costly as you may be thinking if you are thinking that it is because the retreat itself is only $199, and I only at this point I don't think it's still an option to use a firm. Is it Barbara?
Yes, you still can use a firm to
Okay,
make 4 interest-free payments.
okay, great. But I talked to you guys about the past that I have, and why you see me flying and traveling so much often because I got this Go Wild Pass for Frontier, and actually there's 3 of them that they have: the annual, fall season, and the monthly pass. But actually, I'm making this point to say the monthly pass is only $99. And you fly all you want unlimited for a whole month. So once you have the pass, all you pay is 1 cent plus tax, which is $15 for a flight. One way, $15 for a flight. the other way. So you can fly to Arizona for $100 using the pass. Now, one thing I'm gonna point out, Barbara, is that you need to make sure you're in a hub city. At Frontier, one of their hub cities, if you're looking for, some good non-stop flights or some short, not a long layover. So it's important to make sure you're in one of those cities. But the room rates that we have at that block hotel, if you look in the whole area, you won't find any rates better than what we got at the Hyatt, and it's a beautiful hotel. But when you think about what you're gonna get at the retreat, those of you who've been to the previous retreat, you can attest to the value that they're gonna get at this retreat. We get a lot of value on the Sunday night call, but what you're gonna get at this retreat, no comparison. So we're looking forward to seeing everybody. I just wanted to point that out. And if we got any questions about the pass or the retreat, we handle that when we open up the call at the end. But I just want to mention that again because I've had some people reach out to me about it. Appreciate you.
Yes, sir. Thank you so much. My apologies for cutting you off.
No, you did.
Up next is our book, Every Sunday Night that we come on. This is the manual that you are taught from and educated from by the mentors on the call. And it's called Futures and Commodities 101. This one manual represents over 30 years of knowledge that Delvin has learned, as well as, Mr. Johnny as well. And so we have compacted it into one manual to help you learn about this entire market. And we welcome everyone to purchase it. If you have, please leave a review for us. It will help with the sales. If you haven't, if you're considering, whether I should get the book, I come on the calls. But coming on the calls is not enough. You need a textbook. You need something to go by to help you when you're not on the calls. It's the same thing as you going to college or going to school. You go to listen to the instructor, but they give you a textbook. They give you something to study by because that's where the real learning takes place. So I just want to encourage everyone to get this book. It will help you in futures and commodities. So thank you. Much appreciation to everyone that have already purchased it. Thank you so much. We appreciate it immensely.
Also, just to throw in something too on that, Barbara. Like tonight, what we're gonna cover is gonna come from lesson 10, correct?
Yes, it's coming from lesson 7. Yes,
Lesson 7.
on
But
formation.
guys,
And the book is
when we
yeah, we teach from the book. Yes.
when we covering from any lesson, no matter what lesson it is, when we covering something and going into a training, whatever we picking from that lesson, that's nowhere near all the information that's actually in that lesson. We just training on something from the lesson. So it's not the whole lesson that we go over on the call. That's just a fraction of what's all in that lesson. So that's why, again, it's important to make sure you have the whole course that's compacted into that manual. And where can we get that manual at, Barbara?
Anywhere they sell books. Barnes and Nobles, Walmart, Amazon. It's in over 15,000 distributors worldwide. Some places have it on sale. Sometimes it's on sale at Walmart. Sometimes it's on sale at Amazon. So just look around, and if you can get it on sale, by all means.
Absolutely. All right, housekeeping. Let's do some housekeeping.
All right, let's give special thanks to the CME Group for their videos and their education. We know that the CME Group is the world's largest exchange, and we use a lot of their education, their videos. Also, special thanks goes to barchart.com. That is our go-to platform and it's one of the main platforms that the financial industry uses. If you look at the financial channels, you see the charts going across the screen. That's barchart.com. So you are free. We welcome you to, in order to learn this, you need a barchart.com account. And it's a free account. It takes a minute or two to get set up for a free account. You don't have to pay. So we welcome you to do that. Thank you so much. All right, Mr. Johnny, turn it over to you.
Okay. All right, everybody. Now we're going to talk about a top formation. Before I get into this, I want to remind everybody, we just covered the bottom formation. The bottom formation is used for all of us that think about buying low, selling high. Meaning all of us know when we get into a market, if we buy low and it rides up, it goes up in our favor, and we sell high, then we made a profit. Well, what happens when the market gets to the top? This is where we've got to switch our mind, where we can sell high, buy low, and make a profit. So, how do we find a top formation? A top formation signals a potential bearish reversal in the market, indicating that top prices have reached a peak and could begin to decline. We've seen this in Bitcoin. We've seen this in a lot of different commodities. It's typically developed after a sustained upward trend and the buying pressure weakenings and the selling pressure starts to increase. Okay. Next. So how do we figure out if there's a top formation? We do the reverse of a bottom formation. We do a 1, 2, 3 occurs in the top formation known as support and resistance. This can be multiples of 2s and 3s on a chart. So, how do we figure out where the number 1 is? The number 1 is the highest price of the chart and is the resistance level. The number 2 is the entry part, which is considered support. And the number 3, exit, again, is when the market changes direction and heads towards the number 1 and hits resistance and reverses trend back towards number 2 again. Okay? Just like on the bottom, a top formation, it's really best if we can get a 10 to 14 day confirmation is recommended before we enter the trade.
Where would you like to go, Mr. Johnny?
Oh my gosh. Let's go to oil.
Oh, so since we have a lot of people on the call, Barbara, that are not familiar with bar chart, as you go to barchart.com, can you walk us through where you're going from the very beginning, step by step?
Yes, sir. Thank you for that. My apologies, everyone. So this is the home screen for barchart.com. As you can see, I'm logged into barchart. Whenever you come in barchart, always be logged in, because whatever you do is not saved if you're not logged in. So I'm logged in. So there's stocks here, there's options, there's currency, there's so much in barchart.com because this is the guru for the financial platform, financial arena. So I'm going to click futures. And if I double click futures, it takes me to the futures market overview. Well, I'm going to click full list because this doesn't show all the commodities. So I'm going to click full list. And when I do, it's going to pull up all of the commodities and groupings. So there's going to show currencies, energies, financials, grains, indices, livestock, metals, and sauce. So Mr. Johnny wants to go to crude oil, so I know that is considered to be an energy. So I'm going to click there. And from there, it's going to show me all of the groupings that's for all of the commodities that's considered to be an energy. So it has a list of them. These are all the different markets for energy. He particularly wants crude oil, WTI. So I'm going to click that.
That is West Texas, by
Thank
the
you,
way.
Mr. Johnny. And so when you click on the commodity, it shows you all the contract months. Remember, this is futures, so it shows you all the contract months, all the way from now to 2034 July. So this is all the contract months for crude oil.
By the way, that's West Texas Intermediate.
West Texas Intermediate. Okay.
Right.
I've never know what the WT. I didn't know what that stood for.
That's a sweet crude that is the standard for here.
Okay, excellent. All right. So, do you want the May? Well, May is almost over.
Yeah,
June.
let's just go to June.
June. Okay. So I'm gonna click June. This is the price overview page for this commodity, and this is one of the most important pages other than the chart itself because it lets you know your risk management, your contract specification, how much you're controlling, the tick size, when you can even trade this market, the hours, the trading hours, the exchange that it's on, the point value for it, the margin and maintenance, what you have to have in your account in order to enter this market. And the good thing about it, we have a list of mini and micros. So some of the markets have a smaller market that takes less to get into. So if you see a huge amount here, there could be a mini and micro that may only take $200 or $300 to get into. So that's just for the people that's never been on the call before. Then there's a first notice. There's an expiration date. So you would need to be out of this contract. Delvin likes to say at least by the first notice you need to be out of there. So that you can get out of the contract. And there's a lot of other information about crude oil. And so I'm going to go to the full chart. And this is the chart
Okay.
of crude oil.
Now, the reason I wanted to show you this is, as we all know, the current events in the United States and as it deals with Iran, this market went stupid when the war started. However, excluding that one line, that tall line where it shows the high, can you draw a 1, 2, 3 on what we see after that? No, come on over. No,
saying, Johnny,
I'm sorry.
we gonna pretend that candle's not there, right? That was just saying.
Depend the candle's not there. Where's the highest point on the chart? And give me a 1. There you go. Okay. supposing that we're looking at this uptrend and number one, first of all, a little disclaimer. Right now, I wouldn't suggest anybody jump into this because there's too much volatility going on. But I knew this is a top because of the fact that um, I just know what it's done lately. And I knew it'd be easy to show. So you look at the highest point on the chart, we saw it reverse coming down to pick up a number 2, and then it headed back towards the number 3 or back towards the number 1, but it has not made a new number 1. Okay. So this is something that, as Delvin always says, we would put this on our chart to start looking at hard. Okay. Couple other things that some folks on here love. Guess what? We also saw on here. We see a gap, and charts don't like gaps, so they often come back to refill them. Okay. So we would watch this chart to find out whether or not the number 3 is going to fail, which is resistance, correct? And head back towards support. Or does it break through that and make a new number 1? But this is a chart. So we talked about this earlier in the call. How do I know that the number 2's confirmed? Well, guess what? This is the end of the chart. There ain't no more chart to look at. But it's given us an indication of a 1, 2, 3 top. So we will begin to watch this. If it fails and makes a new number 1, then we'll watch for a new number 2. Okay. Now, in this world we live in, this may go to $200 a barrel. So this is a very risky market here. But it's one that I wanted to just show you that there is a 1, 2, 3 forming. But we don't want to get into it until it confirms at the number 2 and makes a new number, goes test and goes below the number 2. All right. Can we go to the cocoa chart?
Real quick, Johnny, before we go, if you don't mind, just
Sure.
to make sure everybody understands what the number 1, number 2, and number 3 actually represent. That number 1 on the chart would be
The highest price.
which will
Or
be
The highest price.
or what? Starts with an R.
Resistance?
Yeah, resistance.
There you
very
go.
good.
What is the number 2?
Support.
Support.
That's
Yeah.
correct.
Market
So
enter.
the market trades away from the number 1. Now we're trading down, and at some point, prices don't want to go down anymore,
Mhm.
and it starts to turn around and trade in the opposite direction, leaving behind support.
But Mr. Delvin, I got a comment right quick, right while you there. You told us about the gaps, and the gaps is where the prices in for that day and then picks up the next day for the number three. That that gap right there for the folks that may not know or does know. Clarify that for me before we go any further.
Okay, you wanna get into that before we finish this 1, 2, 3?
But I'm seeing it right now, so we can. You don't have to do it right now, but
All right, so let's make sure we understand what Stephen's talking about. So there's a gap on the chart. Barbara, are you pointing at that gap? All right, thank you. So the gap that Johnny said, charts don't like gaps. And when a gap forms on the chart, what happens is the market closes at one price. And then the next session, whether that be an hour later, whenever the next session opens up and the market opens up at a higher price than where the market closed at, it leaves a gap on the chart. And that gap that's on the chart indicates that prices did not trade right in that particular area. It closed at one particular price and then opened back up at another price, leaving the gap on the chart. And Johnny pointed out that charts don't like gaps. They don't. In most cases, the market will come back to close and fill the gap. Not all cases, but in most cases, you will see the market come back to fill and close that gap. And when it closes the gap, it's not going to come back on that same candle and close it because that's going to take place at a different time, different day. But what happens is trades through the same area where the gap is, and that's how it's filled and closed. When the market trades back through the area where the gap is, it closes the gap by trading through that particular space. Does that make sense to you, Stephen?
yes, it does. Thank you.
Very well. Now, in this particular case, the market traded back up from support. And as Johnny pointed out, it traded back up toward resistance, which is the number one, but did not trade and exceed past the number one. It it leaves a number three, which is a second level of resistance. And that's how we have our 1, 2, 3. But just know the 1, 2, 3 formation is simply just support and resistance. That's all it is. They just the 1, 2, and 3 represent something different when it's the top formation versus when it's the bottom formation. But they're just support and resistance levels. Now, where you want to go, Johnny? Thank you for letting me point that out.
Yeah, go back to that cocoa chart.
Okay.
Oh, that was a bottom, wasn't it?
That
Can
was
we
bottom.
do you have another one you'd like to look at?
Let's see.
So in this particular case, we're covering top formation, but everybody should understand that in a top formation,
Oh, go to cattle.
it's
Cattle.
just the opposite, guys.
Oh, I'm
Just
sorry,
remember
gold.
that.
Gold would be a good one.
Yeah, that's
It's just the opposite. That's all I want y'all to know. All right, John. I'm surprised you ain't go to your Bitcoin. So Barbara, one more time. When you went to this particular commodity, what grouping did you go to?
I went to metals because gold is a metal.
Okay.
This market's a little crazy too. Go to livestock.
So make sure we Don't forget, guys, y'all make sure y'all get y'all free account on bar chart.
Oh my goodness. Okay. Oops. Just jumping around on me. All right. Notice that okay, on this chart, we're going to get to see both sides of it. So in the highest part of the market, and that was, can you scroll down just a little tiny bit? In October to November. Okay. All right. So for those that don't know, most cattle go to market, especially the feeders, go to market in October, November for those large facilities that the large cow-calf operations. So there's a large influx of feeder cattle. But anyway, so here there's some other problems going on here, but you'll see a 1, 2, 3 top formation form. So if you want to go ahead and do the 2 and 3.
So, Barbara, real quick, if I didn't know what the highest price or the lowest price on the chart, how would I be able to recognize it?
It has a half moon, a little half moon symbol right here. It's always on the highest price and it's always on the lowest. So bar chart just gives that to you so you'll know where to find it.
So if you'll notice, you got a 1, 2, 3 top formation, which took it from an uptrend to a downtrend. All right. So if the number 1 is the highest point, we know it as what?
Resistance, the ceiling.
The ceiling. The number 2 is support. The number 3 is what?
Your risk and
Resistance.
your resistance, but your risk and your, what do you call it?
Exit.
Exit. Thank you.
Exit.
Thank
All
you.
right. Now it reversed trend again and went back to challenge the number 2. Okay. Did the number 2 confirm? This is what
Yes.
we're asking y'all to
Yes.
participate.
Yes.
Yeah.
All right. So the first number 2 is what we call it now. Starts with an E.
Exit.
Nope.
Ooh,
Close.
Entry.
Entry. There you go. All right. So we entered the market at the number 2. All right.
Mm-hmm.
And it started a downtrend.
Mm-hmm.
So if we failed to get in the first number 2, the second number 2 would also be entry.
Right.
Okay. And believe it or not, I'll go down lower and give me another number 2.
Mm-hmm.
All right. And then give me another number 3. All right. So what are we seeing? We're seeing lower lows and lower highs, or
Mm-hmm.
lower resistance. Correct? So if each time we get another lower number 2 and we change our stop loss to the new number 3, we haven't been stopped out, have we?
No.
Give me another number 2 and 3.
Mm-mm.
We're still in the trade. Okay. Until we get to the bottom of the chart. Okay. Put that number 2 under the lowest point. So as we're moving down the chart, we're going, wait a minute. Do I know this is a new number 2 or a number 1? I don't know yet, do I? Until, wait a minute, let's go back to the number 2. The next number 2. That one right there. No, the one to the left. Scroll up to where the line is. Come on, come on, come on, come on, come on. And stop. All right. If that is considered support, right? And that support fails, right? And it continues up to the number 3. In other words, if that was a number 2, up above that, which will be now the new number 2 on a 1, 2, 3 bottom, would be our number 3 if it was still continuing down. Are you following me? But it failed. So now, instead of the number, that last number 2 being a 2, it's now a number 1. And we have a number 2 that where we would have put that number 3. Are you following me? So can you put a number 2 on the 1, 2, 3 bottom? There you go. So now we've covered both sides of this thing. We went all the way up on an uptrend because I guarantee you, can you move the chart to the left or to the right? Look at that uptrend. That was a long uptrend. That's the downtrend. Okay, can you show the downtrend that was on the other side? Okay, can you do me a favor? Give me an uptrend from the very far left of the chart up. Okay, so we had an uptrend that went all the way up to the number 1. Go all the way to the number 1. Okay. And then we had the 1, 2, 3 top and then it started a downtrend. This is what we're trying to explain. When there is a 1, 2, 3, either top or bottom, it often indicates the point that you're going to have a reversal of trend. And that reversal can be one of two things. It can be changing from an uptrend to downtrend, uptrend to sideways trough, which it kind of did in the middle, or one of those two. See, it's going to be a trend reversal, one way or the other. Okay. I hope this is clear to everybody. Delvin, is that
Crystal clear, Johnny. Very clear. Matter of fact, I would like to do something right now. If you got anything else you want to cover right here?
no, sir? I just wanted to make sure we understood how 1, 2, 3 top works. So if we made money going up and it reverses, we can sure reverse and sell a contract and go and make money go in the opposite direction.
Absolutely. Now, Barbara, here's my scenario. I'm new to this call. I never traded a 1, 2, 3. Never seen a 1, 2, 3 before, and trying to get the grasp of it, trying to understand the 1, 2, 3. So, can you walk us through when you come on the chart and you start doing the charting on the chart? What from the first thing you do, and then seeing that 1, 2, 3, marking that up.
Can you go to a feeder? Can you go to the feeder chart?
Can you give us that, Barbara?
Yes, sir. Okay. Let's go to feeder cattle, and then we'll do that. Okay, so the first thing I think of when I come to a chart is my target, my profit, because that's going to determine whether I'm going to work this chart up or not. That's the first thing. Because if your target and profit is not in the right spot, then that tells you you have missed the first opportunity, but you need to wait for the market to come back to you. So I'm going to find my 50% retracement. There is a formula that we use to find that, and then there's a tool up here that you can just drop on bar chart and it'll tell you for it. But the formula would be you take the highest price on the chart and you add it to the lowest price on the chart, and you take those two numbers and you divide it by 2. And that's going to tell you where your 50% retracement is, which is your target, which is where you can profit from coming into this market. But for the sake of time, I'm just going to use the bar chart tool. And we do have a call teaching you about bar chart that's on the YouTube channel. So my 50% retracement for this market is 333.964. So I'm going to actually find the 50% retracement for different time frames, because we look at different time frames to compile information. This is how you learn the personality. We primarily trade from the monthly chart, which is a 6-month chart. That's what we primarily trade from because it shows the most up-to-date information. But then there's one year. So what I do, I go and find 50% retracements for several time frames. And I say, oh, that's the 50% retracement. Because see, when you do this, sometimes the 50% retracement is the same for like 4 time frames. That's a huge indication that price is getting ready to go there. So that will let you know, oh, I can get into this market and this in the same area for different time frames. And I look at the 5-year. I do the same thing. I said, let's see where it's at in the 5-year. Then I look at different time frames. I may do 1 month, 2 month, 3 month. For the sake of time, we won't do that. But it lets me know. Then the next thing I do, I look at the formation. Now let's see what formation it is in. And I say, oh, well, it's a top formation, but it hasn't made a 2 or a 3, or it could be a bottom formation. Well, it's close to this is my number 2. My 50% is right here. Is this a market I want to get in? Probably not, because I'm probably going to risk too much, to get to my profit. So all of that matters. So that's what I do. Then I set up my 1, 2, and 3. Then I do my risk management, and I look at my account, and I see, how much I got to risk between 1 to 10%. Is this a good risk to reward ratio? That's my final thing that I look at to determine whether I want to get into this trade or not. Is it worth it? Am I going to risk too much to make a little profit, or is my profit going to be 2 times the amount that I'm risking? So those are the steps that I take that helps me to operate in proper risk management. But by going through the different time frames, you learn the personality. You have to learn how each market moves. And you don't have to look at the chart every day. You could spend 30 minutes a day and learn this, and you don't have to sit and look at the chart, because like Mr. Johnny just told you, your entry, let's just say your entry is number 2. So you can just let it sit and wait. And you say, well, when it retests this is when I'm going to enter. You could have your order in with your broker to enter here when it retests. But you don't have to sit in here and watch the chart every day. And so you could be in a trade, and every time it go up, you could move with it. And as you see, this market didn't come back down till it went all the way up here. It didn't start to come reverse until it made its highest price. Then it reversed, and it went reverse into a downtrend. All of this could have been your profit, all the way from here up into here. So it's just a matter of studying, but it doesn't take to look at the chart all day. People always want to know that. Do I have to sit and look at the chart all day? No, you don't. We use limit orders because we want the market to do what we want it to come to us. That's what we want it to do. So back to
Matter of fact, Barbara, just for the sake of example, mark up that 1, 2, 3 top up there.
here.
Mm-hmm.
Okay.
Now you see a top formation on the chart, Barbara, and you wondering if you should take this trade, if it's gonna be a good trade as far as risk management concerned, risk to reward ratio. You you do what? You check the maintenance and the
Yes.
margin, correct?
Yes, I do. So I go and check the margin and maintenance. I go to price overview, and I check to see how much of a deposit I have to have in my account, which is your margin, in order to get into this trade. So your account, you would need to have $6,600 sitting in your account to even take this trade. And every day at the close of the trade, which is your maintenance, you'd have to have $6,000 that stays in your account continuously, just as long as you're in this trade. So that's not your stop loss, that's your margin and maintenance. That's totally separate from your stop loss. Your stop loss is related to your risk of no more than 10%. It doesn't have to be 10%. It's anywhere from 1% to 10%, but no more than 10% of your account. So let's just say,
Barbara, in this case, the market did confirm, right?
in this case, it did. It confirmed this number 3 come back down and traded past the number 2, and it kept going down. So this is your confirmation right here. When this candle came, this bar came back down and traded past the number 2. This is where you would enter, kind of somewhere under the number 2. It's not at this, it's under the number 2.
So, Barbara, you said you do your risk management, right? You want to make sure this is a trade you want to take and make sense. So what would you do now to determine that?
So what I'm going to do is determine my stop loss amount. And let's just say I want to risk full 10%. So my stop loss is going to be above the number 3. So I'm going to put it I'm going to make it red, the line red. I'm going to put it right above the number 3. And my entry is here. So however many points that are in between 368.925 and 357.910, this is the amount that I'm willing to risk. No more than this to get, let's just say I'm coming down here to, let's just say I'm coming to 328.465. This is going to be my target. I consider this to be my 50%. So you can look at it now and tell that there's a lot more space in between the entry number 2 and your target down here than it is between your 2 and 3. But we can just do, for the sake of time, you're going to subtract these two numbers. And then you need your point value, because you now have to multiply that times your point value, the number of points that you get, to determine the dollar amount that you're risking. And it can't be more than 10% of your account. So I'm going to use a quick tool just for sake of time called risk to reward. So I'm going to let it know I'm entering in at the number 2. My stop loss is right here at the number 3. My target is here. And I'm going short, not long. So I'm risking $5,404.30 to make $14,608.50. So my ratio is 2.70 to 1. But the issue is, like Mr. Johnny tells us, how much money would you have to have in your account if you were risking $5,400? How big of an account size would you have to have just for the risk management of 10%? Who can give me that number? And you know right off, you got to have more than $6,000. You got the margin, but you got to have more than $6,000. You better have more than $12,000. So you would need more than that, you got a $5,400 stop loss, and this your full 10%. Who could give me the number to tell me how big of an account size do you need to risk $5,400?
54,000.
Say that again, Paula.
54,000 plus. Add a 0 to the end.
That's 10% of 54,500.
Mm-hmm.
Well, I think you got it right, Miss Paula. I think you're spot on. So
Thank goodness.
you need an
Thank goodness for the
account size
mini and
of
the
it.
micros, bro.
Thank goodness for the mini and the micros.
Amen.
Amen.
Yeah, so you have to do that. This is important. You can't miss this. You can't look and say, well, my reward, That's a big drop. If I can go down there, I have all that, but you don't have the money. We don't want you to get what's called a margin call. Mr. Johnny can tell you about that. We don't want you to get a margin call. Isn't that right, Mr. Johnny?
Absolutely. So, yeah, I think you explained it very well.
Yes.
So, so remember, every point that this moves is $500. Can somebody tell me what a point represents?
Come on, somebody that's been on the call for a long time. Tell us what a point represent.
Hold on, I'm working on.
But for the sake of time and the fact that we have so many new people, just go ahead and walk us through it, Johnny.
Well, remember that a contract is 50,000 pounds. Okay. Can you go back to the specs? So a tick size is 0.0025 cents per pound on 50,000. Okay. So a point is $500. All right. So 500, right? Or what divided by 50,000 pounds is $500? Is it a penny? It's a penny. So every time this moves a penny, that's $500. And it can move a bunch of pennies. Can you see more? And the daily limit is $9.25. How much would that be? That's a lot of money.
Yeah, for the sake of time, it's probably gonna be over 4,500.
Yeah.
Awesome, awesome. So I want to say, I know if you're seeing this for the first time, if you have never traded the formations, the top and bottom formation, never traded futures contracts, a lot of what we're covering could seem or feel foreign. It's very good to go back and look at the prior trainings from from the first training up to this point to get a real grasp of understanding where we talk about what a futures contract is, where to go get all the information about that futures contract, the whole 9 yards. But this is what's gonna help it all make sense. Because here we are in is this week 10 or week 9, Barbara, that we're covering right now?
This is week 10.
Yeah, so there's several trainings prior to this call that we went through, and I just wanted to say that so in case this feels a little overwhelming or a little bit confusing, that's because of all the training and lessons that have already taken place before you may have joined the call. So, um, very good idea to go back and start with one all the way up to training lesson number 9. So, Johnny, if you didn't have anything else, man, we can open it up. We went way over our time tonight.